On today's episode, we are going to take a look at GNUS Brands and why this company is up over 2,000% in just the past month. So let's get started. Alright, so the first thing I think we should do is understand what GNUS Brands is and what they do. So pretty much GNUS Brand is a media company meant for kids. They create shows that are meant for kids, for babies, and the whole purpose, the business model of them is to be able to create iconic characters. And with those iconic characters, they go from to licensing deals where they can license off, for example, toys, backpacks, lunchbox, anything kids want, towels, I don't know what, kids, socks. So like I said, that's the main purpose of this company, is to produce iconic shows. So then those shows create iconic characters, and those iconic characters become licensing assets for this company. And to be honest, they actually have some great names and some great distributions or some great partners with them. For example, they have a Stan Lee superhero kindergarten, which supposedly is written by the genius mind of Stan Lee. And the voice actor is none other than the Terminator himself, Mr. Arnold. They also have other shows that are premiered. For example, Llama Llama is already streaming on Netflix. They also have Rainbow Rangers, which actually came out on Nick Jr. on November 5th of 2018. They have a lot of big shows. Baby Genius is a show meant for even younger, for toddlers, and they have a lot of award-winning songs here, a lot of episodes that came out in 2019 as well. They have most of these are educational, but meant for kids, right? They have a Thomas Edison Secret Labs, which is more of a STEM-based adventure comedy, and they're all available on Kid Genius channels, and they have over 52 episodes. So they have a huge selection. They also have Secret Millionaires Club where they have like iconic investor Warren Buffett. They also have special guests from Jay-Z, Bill Gates, Shaq. So you can see there's some big names behind this company and the shows, and you can find them in different parts around, in just different distribution centers. For example, Space Pop is the last one we're going to take a look at, and that's actually a YouTube series. So this company is very well diversified and is found in different brands. Like I said, you can find them in Netflix, you can find them in Nick Jr., you can find them in YouTube. And soon, the biggest thing for this channel is they're actually creating their own streaming platform. And that's what I really think is driving this stock price up. And it's called Cartoon Channel. So Cartoon Channel is going to come out June 15th. And it's going to be distributed in so many platforms. And what they say about Cartoon Channel is fun for kids, safe for kids, and it's going to be free for everyone. And this is the thing, right? It's not a subscription that's going to end up paying for. They're just going to start building that awareness of their brands, and with that brand awareness, they're going to start licensing deals. For example, like I mentioned, the toys, the lunchbox, shoes, and all the other stuff that kids like to buy. And it's pretty crazy that you're going to be able to find them in so many things. You're going to be able to find them in Amazon Prime TV, YouTube, Apple TV, Roku, iDroid, Redbox, Amazon Fire TV, Redbox, Comcast, Sling. So all these different platforms, and this is what's pretty impressive, right? I think recently we just saw HBO Max go into the streaming platform, and it was considered one of the worst streaming platforms to happen, just because they really did not diversify in how many different platforms they will be able to be found in, and that actually helped out. So Cartoon Channel, which is what they're creating, is trying to do something different and actually try to find itself in all different types of platforms, so kids and parents are able to find them very easily. And before we go any further, guys, don't forget to hit the subscribe button, the thumbs up, and the bell. It helps the small channel out so much. I truly appreciate all the support I'm getting. Also, if this is your first time to the channel, this is not my normal type episodes. Normally I do a very in-depth analysis of a company. Every day I take a look at a brand new company and pretty much just take a look at what the company does, past historical information. Actually, this is pretty much what I do, but a little bit more in depth. And like I said, I talk about a new company almost every day. I spend hours just learning about companies every day. So make sure to hit the subscribe, guys, and I truly appreciate the support. Also, in the comments below, let me know, are you guys right now bullish on GNUS Brands, Are you more just trading it, or are you more of an investor? And that's what I want to know, because right now, just the way the price is moving, it seems like it's more of a trading stock opposed to an investing stock. But I want to hear from you guys. Are you guys in it for as an investor, or are you guys in it as a trading? And if so, let me know why in the comments. All right, so earlier in this episode, I kind of described what Genius Brands does, but the best way to actually show is the CEO. He sent an email earlier this month, and he pretty much said this: they make animated cartoons for children, which they distribute worldwide and license the characters on consumer product manufacturers for royalty income. The characters and programs, which began developing 4 and 5 years ago, are now coming to this market with hundreds of products in every category for kids. So this has been pretty much a slow mover. So I'm not sure when this company went IPO, but if it did go IPO for a few years, it has been the stock price has been pretty stalemate. But now with all these news coming up, I can understand why investors are trigger happy into buying the stock. And remember, I said this company is creating a form of a streaming platform, and they do believe that the streaming platform will reach over 100 million United States television household and over 200 million mobile devices. And this is pretty crazy, right? When you take a look, I know this is not a subscription-based platform, but when we take a look at numbers from Disney Plus, right? Disney Plus subscription right now is close to a little bit over 50 million, I want to say. And then you have Netflix subscription. Let's just take a look at Netflix subscription numbers. And as of April 21, Netflix has about 183 million subscribers. So of course, the whole business platform for this is completely different from Netflix, right? Especially since this one, they do not want to charge for the subscription service. They are more from the royalty of the products after people become aware of their characters. And like I said, I just want to keep reiterating some of the cartoons this company has and some of the big names behind it. For example, Rainbow Rangers, which I think is probably one of the biggest run. That's behind Nick Jr. Show is behind that one, right? And then I also mentioned Stan Lee's Superhero Kindergarten, which is voiced by the Mr. Terminator. That program is licensed by Amazon Prime in April. So these big names keep coming out. We also see that Captain Courage is another show, and that was produced in partnerships with Alibaba. On May 5th, another big news, on May 5th, Rainbow Rangers, which is the one that's in Nick Jr., products are being produced by Mattel, which is a big toys company, and that's going to start debuting in Walmart stores later this summer. So they are seeing an increase. They're going to start seeing a huge increase of revenue. One of the bad things, like I said, first I was going to pretty much talk about the good things about the company, and now I'm going to talk about the not so okay things, but I think investors should know. First, on May 7th, this company announced that it would sell 8 million shares at 35 cents. So less than a month ago, people were buying this for about 35 cents. So that's insane to see this company go from 35 cents to now people paying over $6-7 for this company. Then May 18th, they announced another 7.5 million shares, this time at $1.20. So it did increase. Then on May 28th, so this was just a week ago, there was a sale of about 20 million shares at $1.50. And I do think probably dilution is going to continue, especially with such a high stock price right now. I think it would be smart for the company to go and sell some more shares just to be able to pick up more money and have more cash on their balance sheet. And unfortunately, that's not a good thing for investors, but I do think for a business in the long term, that seems like the smartest move for this company to make. But again, why would someone be willing to pay just a week ago pay $1.50, but now people are paying $7? And I think this is the biggest scenarios and the biggest case that the bears have for this company. There's actually another one where we're going to take a look at the revenue of this company and actually see if it's really comparable to what this company is worth. So next, I wanted to take a look at this company's current balance sheet, which we reported in the most recent earnings, which was which was the end date of March 31st. And here, I pretty much just want to see this company's long-term debt and the amount of cash this company had during that time. Obviously, with all the debt offering that this company had, with all the offerings this company has done, the amount of cash has most likely increased dramatically compared to where it's at, compared to where what's at when they reported this earnings. But during this earnings, this company had about $4 million in current investments and about $2.76 million in cash and cash equivalents. That pretty much is about $6.75 million of quick cash that this company can use. Now let's take a look at this company's total non-current debt. And this company had about $5.75 million of non-current debt, and I want to say close to $1 million of current debt, so about close to $6.75 million of debt. But so that this company had enough cash at the moment to pretty much pay off this company's total current debt and non-current debt. So that to me is an okay balance sheet, right? I've taken a look at numerous balance sheets throughout the past month alone. And like I said, if I was to give this company a balance sheet a grade, it would be somewhere around a C plus, maybe B minus at most. And one cool thing that I like about this company's liability distribution is the amount of deferred revenue. Deferred revenue is close to $5 million, and this is money that this company will eventually collect once this company gives the product to its customers. So I usually consider this a fake revenue. So to see this actually be such a huge portion of the company's liability is actually a nice bullish sentiment for me. All right, so next I want to take a look at this company's most recent earnings, and in its most recent earnings, this company only reported revenue of $0.33 million. And if I'm correct, that's $330,000 for a quarter. I know certain people that make more money than that, so that's pretty crazy to see that drop low. But I know for the full year of 2019, I think we're going to take a look at it in a bit. This company reported a full revenue of 2019 of about $5 million. So with $5 million, let's take a quick look at this company's market cap. This company's market cap, if we zoom in a little bit right better, is about 660 right now. So that if we take a look at that revenue, that's pretty much a price to sales ratio of 130, and that to me is still actually pretty high. But remember, they're just saying that at the beginning of this year is when they're starting to see movements, right? Walmart is now going to start selling their products, but that's not happening till later this summer, and I wonder how much COVID-19 might affect that, if that's going to slow down a bit. But I know, right, with more people working from home, summer vacation coming in, more people are going to be watching, more kids are going to be watching their shows, so more kids are probably more likely to ask their parents to buy them the toys. So I do think we could see an increase of revenue, but still 132 price to sales ratio I think is pretty crazy. And actually, though, I think this is probably the last thing I'm gonna take a look at is this company did have a big bear come in and talk about them, and that's Citron Research. And Citron has been known to really go against some companies, and lately they have been right a lot. So by having them actually have some form of bearish sentiment, it actually can scare off a lot of big investors. So what they pretty much say is GNUS Brands right now can't compare to its rival, which is WildBrain. WildBrain is another public company, and I did take a look at them. WildBrain stock is traded over the counter right now as ticker WLDBF, and this is a Canadian business. And this company is responsible for big shows like Teletubbies and other hit shows. I don't have kids and I don't have any younger siblings that pretty much know about TV. So the only one I knew, the big one, was Teletubbies. But they do have other hits and they're still going. So they compare it to that company, and they say that WildBrain is one of the leaders in this market. And they say that it's crazy. GNUS, the one we just talked about, only has $5 million of revenue, but it had a market cap of about $800 million. Compared to the leader, WildBrains, who owns Teletubbies, who has a revenue of $332 million, but only has a market cap of $175 million. So they're saying this does not add up at all, right? So let's just repeat that again. GNUS Brands has a revenue of $5 million, but has a market cap of $800 million. WildBrains, which owns Teletubbies, has a revenue of 332 million and has a market cap of 175 million. So that, again, another reason why I understand there's a lot of bears in this company, especially when you see a company go up 242,400% in a month. You're gonna attract a lot of bears, and at the same time you're gonna attract a lot of bulls, right? There were a lot of positive things that we mentioned in this company, but again, there were also a lot, and I feel like most of those positives are this company does have a future where it can grow, where bears are more in like how the numbers look right now and how they compare. So I do think both sides have a nice have good, and I do believe both sides have, I want to say, the right opinion, and they're both in the right place, and it's only a matter of time for us to see who is right. But to me, right, just my opinion, just to see that strong price up increase, and when compared to a company like WildBrain, it does not make sense to me. But just because it doesn't make sense to me, it doesn't mean it's a bad investment, right? People can continue to make money out of this, but this to me seems more of a short-term investment opposed to a long-term investment, which is what I normally do. So I hope you guys enjoyed today's episode. Like I said, don't forget to hit the subscribe button, the thumbs up, and the bell. It helps the small channel out so much, and I truly, truly appreciate the support. So take care, guys. Have a good night, and see you next time.